Hi, everybody. Welcome to a new week. Scott Riley, the Market Update Desk, NMLS number 157524. We have a lot going on. Obviously, we had the inauguration yesterday. There's been a couple things in play that right now that are starting to help us again with mortgage rates and 10-year bond market. So, one of the things they're talking about is increasing oil production. An increase in oil production would lower the cost of oil in the market, which would then transition through the economy in regards to inflation data. Because oil and gas is such a large component of so many goods and services that run throughout the entire economy, when we start to affect that number, we get big rewards on the inflation side. And that's one of the reasons the bond markets has been rallying since last Wednesday. Last week we had CPI, we had producer price index, the wholesale version. We had retail sales on Friday. Now we're getting a benefit within WTI crude oil. And the thought process is those numbers theoretically should flow through to the PCE, personal consumption expenditure, next week. That's the Fed's favorite measure of inflation. So if we get positive numbers that flow through from those two other points, CPI and PPI last week, into the PCE inflation data, the bond market could continue its rally. Now we're seeing the 10-year bond down to I'm just looking right now as we're talking, 4.57. Keep in mind, a week ago, we went all the way up to 4.78. We thought we were on a trajectory to 5%. So right now, we're bouncing off against a somewhat of a weak resistance level, the 25-day moving average. If we can beat that, the next downward move is at about 4.42. That's great news. Mortgage-backed securities were up about 50, 55, 60 basis points from a week ago. Once again, we're hitting the 25-day moving average. If we get a little bit more momentum, there's a lot of room to run. What does that mean in the grand scheme of things? Better mortgage rates. We may just be, it's not a given, but we may just be in a little bit of a trajectory here to get a little more relief in mortgage rates. Well, every little bit helps. Getting into the sixes and maybe the mid sixes helps a lot of people move forward with getting their house listed and getting more inventory available for our buyers. So we're out there helping explain this to buyers and sellers and our agent referral partners, helping educate everybody on why it's a great time to get the houses up for sale right now and for buyers to be very active right now. If we stay where we are with rates, you're going to get a lot of buyers out in the market. You're going to have more competition. So we'll help explain why now is the time to buy and not waiting until spring or summer where there's considerably more competition. Hope this helps you out. Do us a favor and like, share, and follow us on all the socials, Facebook, Instagram, and YouTube, The Market Update Desk. Appreciate it. We're the original singular news source for West Michigan for financials, 616-293-2189. Have a great afternoon.